Hey, what's up, stock compounders? Brad here. So, Warren Buffett gave an interview with Charlie Rose just a few days ago. It's a fantastic interview, covers so many topics. So, as always, I want to share my highlights in this video, hopefully to help some of you and to really drill these lessons into my own head. So, the first point I want to highlight here, choosing what you do and who you do it with is the game. Okay, and this is something I've heard from Naval Ravikant as well. Warren says, if you're like me, you'll spend the next 70 years doing it. Okay, so it's really important. Choose very carefully what you want to spend your time doing and who you want to do it with. So Buffett reminisces on his first investment. In 1942, I made my first investment. I spent $114.75, which was every penny I had saved. He's 11 years old at this point. Bought 3 shares of City Services Preferred. Okay, incredible. He's buying a preferred stock as his first investment at age 11. He says had a preferred stock that was selling at $38. Started skipping the dividends during the Depression. Had accumulated dividends of $60 or $70 per share. Had a par value of $100. One morning I said, "Let's move, Pop. This is it. I want to buy this." He plowed his entire net worth into one company. He said, by this time, I had read every book in the Omaha Public Library on the stock market, some of them twice. Okay, incredible. Obviously, obsessed already, before being a teenager. I knew more about the actual mechanics of the stock market when I was 11 than I know now. But when I was 11, I picked stocks, okay? I had the whole wrong idea. I thought stocks were things that went up and down, so I charted them. I read books on technical analysis. The first 8 years, I thought the important thing was to predict what a stock would do. And then Warren Buffett discovers Ben Graham. Read Ben Graham at 19 or 20 years old, and I realized I was doing it exactly the wrong way. I rejiggered my mind after reading The Intelligent Investor. From that point, I never bought another stock. I bought businesses that happened to be publicly traded. I became an owner of businesses. I didn't care what the price did in the short term. Okay, in fact, he wanted the price to go down in the short term because that means he could buy more. He could get more for his dollar. In terms of ownership in those businesses. Charlie Rose mentions, Buffett's a genius. Buffett says, I'm not a genius. I'm a bright guy who's terribly interested in what he does. I've spent a lifetime doing it, and I've surrounded myself with people that bring out the best in me. You don't need to be a genius in what I do. I'm in a game where you probably need 120 points of IQ. 170 doesn't do any better. In fact, it probably does worse, okay? Because you think you're smarter than you actually are. We've seen some funds have massive blow-ups with incredibly intelligent people. You don't really need brains. You need the right orientation. 90% of people that buy stocks don't think about them the right way. They think about something they hope goes up next week. If the market goes down, they feel worse. I feel better, okay? Because Buffett isn't looking to Mr. Market to tell him if he made the right decision, at least in the short term, over a period of days, weeks, months, even a couple of years. I think about what a company is going to be worth 10 or 20 years from now. And I hope it goes down when I buy it because I'll buy more. Okay, so very different perspective Buffett has on investing in the stock market than most market participants. Thinking about what a business is going to be worth a decade or two from now, right? That's Totally different game. He says, when I want to do something, I always want to do it big. I put my whole net worth in city services preferred. Okay. A little bit of a joke there, but it is true, right? When he was 11 years old, he put all the savings he had into one company. Since that day in March 11th, 1942, I have never had less than 80% of my money in American business. That's really where Buffett wants to be invested. He wants to own a piece of American businesses. And he talks later about why that's so important to him. You can call them stocks, but I see them as American businesses. What makes me happiest is what I'm doing. Okay, I enjoy two things about it. The first, I know I'll win over time. It doesn't mean I'm going to beat everyone else, but the game is very, very easy if you have the right lessons in your mind about what you're buying. Okay, so Buffett has really simplified the game of investing to the point where it's easy for him to win. Doesn't mean he doesn't spend a ton of time on it, right? But that's what he enjoys doing. I'm not buying stocks. I'm buying pieces of overwhelmingly American businesses. I'm happy when I'm doing that. And I'm even happier if the stock market is going down, right? If prices are dropping, because that means I can get more business for my buck. The second thing I enjoy, I like being trusted by people. Okay? He really likes managing other people's money. It shows him that they trust him. And he talks later, it's not just their money they're trusting him with, it's their future. Okay, so it's a big thing. A lot of people would, get sweaty palms thinking about how much, other people are relying on him for their futures. But Buffett, he really likes it. It's one of the things he loves about being an investor, that feeling of being trusted by other people. He says, I would rather do what I do with partners than do it sitting in a room by myself, even though I might make more money that way. He might make more money if he didn't have any partners, right? It was just his own money. And we've seen other great investors do that, right? Joel Greenblatt, after he ran a fund, I think Gotham, for 20 years or so, he returned all outside capital. Nick Sleep did the same thing, returned all outside capital, managed their own money. Buffett didn't do that, okay? To the detriment of his returns, right? Because he's managing $500-600 billion. If it were just his money he were managing, maybe it would be, I don't know, an order of magnitude less. That's just a number I'm throwing out. But he would have a lot more opportunities in terms of investments that could move the needle. But this is really important. He likes being trusted by people. He says, I've lived in the same house since 1958. Okay, a quarter of the life of the country, of America. I love how he puts things in that perspective, the life of the country. That's a long time to live in one house. And it shows. Most people, when they get wealthy, they get rich, they want to buy 5 houses. They think that buying more stuff is going to make them happier. And Buffett saw through all of that somehow, right? He saw, I don't want to own 2, I don't want to own 5 houses, right? Because everything you own has problems that come up with it. It's not going to make me happier. It's just going to give me more problems. What do you need in order to make a big investment? He's asked by Charlie Rose. I need to know that Berkshire is going to be worth more money. Okay, it's pretty simple. Not tomorrow. In fact, he hopes it goes down tomorrow, but at some point down the road, right? 10 years, 20 years. That's really the lens that he's looking at investments through. Is Berkshire going to be, worth more a decade or 2 from now because I made this investment? He says people would be so much better off if they didn't have a stock market, okay, in terms of buying businesses. People say one of the great advantages of the stock market is liquidity, right? You can buy and sell in a second at the touch of your fingertips. Buffett thinks that's probably not a good thing, right? Because people don't take the time that they should to treat stocks as buying an ownership stake in a business, right? When people buy a house, they look for months often to really understand, where is the value here? Knowing they're going to own it probably for a decade or more. Buffett really thinks people should be looking at businesses the same exact way. When you're buying businesses, there are times when you get a chance to act and do something really intelligent. It may happen once every 10 years or once every 20 years. It depends on what field you're in, where you live, what you know, right? What your circle of competence is. There's a lot of foundational work, but the actual big acts in life don't come along very often. And this reminds me of Buffett's quote, "When it's raining gold, don't put out a thimble." Okay? Back up the truck. Next, he talks a bit about how incredible of a story the United States has been. He says, today, the bottom 2% of earners live better than John D. Rockefeller was living when I was 6 years old. Okay? He was the richest man in the world at the time. And today, even if you're in the bottom 2% in the U.S., right, you get better access to better medicine, better education, better entertainment, better transportation, quality of life, Buffett is arguing, is better for someone who's in the bottom 2% of income in the U.S. versus the richest man in the world just one lifetime ago when Buffett was 6 years old. It's incredible. If you had gone to the Constitutional Congress in 1789 and you said, I'm going to tell you what this place is going to look like in 3 more of your lifetimes, right? 3 of Buffett's lifetimes. People are going to be flying in the skies, watching sports all over the world, entertainment, advanced medicine. They would have hauled you off to a lunatic society, right? The progress that's been made over the 3 lifetimes is just incredible. So Buffett is baffled by what's happened in the U.S. just over that short period of time. Let's see. I get that time to speak. Okay, so he's asked here. There's a lot of questions he's really not willing to tackle in this interview with Charlie Rose, kind of different topics. He says, hey, I've got the Berkshire annual meeting coming up, end of April. That's the time when I get to speak to all the people who have trusted me with their money, trusted me with their future, and I get to talk to them all at the same time. Okay, it's on a Saturday. The stock market won't be open for 2 days. That's when he really wants to tackle a lot of the things that he's just not willing to go there in this interview. So he says it's going to be a special event. Thinks there's going to be more people at this Berkshire meeting than any other Berkshire meeting. He talks about how old he is, right? He's 91 years old. There's a lot of things that are deteriorating, right? He can't add numbers remotely as fast. Sometimes he goes upstairs, and by the time he gets up there, he can't remember why he went upstairs. It's harder for him to remember names these days. But he says, I can allocate capital as well as ever. Okay? He does have a different set of opportunities these days. Size restricts the kinds of things that can have an important effect on what I can do for people who leave money with me. A fat wallet is the enemy of high returns. Buffett and Berkshire Hathaway clearly have a fat wallet, right? Berkshire is worth $500 billion, probably a bit north of that at this point. I made money in an entirely different way when I was working with $10,000. And when I started working with other people's money in 1956 with about $105,000. Everything I did could double our net worth. Okay, back in 1956, the beginning of the partnership days. There were thousands of possibilities, and I wanted to know every one of them. This reminds me of Buffett reading through the Moody's manuals, in some cases multiple times, to starting with the A's, looking at every business in the U.S. to try to figure out where are these opportunities to double my money, to double the money for my partners, right? People that have trusted me with their futures. We're on the home stretch. He's asked, do you have any regrets? He says, if you look back, you can always say, I should have done this, I should have done that. But I'd be nuts to look back on my life and think I haven't been the luckiest guy imaginable. Aside from sickness and death, everything I thought was bad at the time has turned out well. Right? This is such a lesson here, right? It's all learning opportunities, right? Something bad happens, mistakes happen. If you learn from those, right? If you get better as a result of those things, you're going to be unstoppable, right? You're going to compound that wisdom, and that clearly reaps huge dividends, particularly in the realm of investing. What really means something to me is the record at Berkshire Hathaway, right? That's what I've done. He's asked, about being on the Forbes, one of the top 5 richest people in the world. That richest people in the world thing, that's not what really jumps out to Buffett. It's not kind of the legacy as he sees it. I paint the painting. How the world bids on it is up to them, right? So Berkshire is his masterpiece. It's what he cares about. It has been way more fun doing it with Charlie than if I had done it alone. And then last, if you were giving one last lecture, what would you want to say? I'd talk about what's been important to me in life and how they should decide what's important to them in life. So really having your priorities straight in life. For Warren, it's been his family, his business, right? Berkshire Hathaway, and millions of people who have trusted me. Awesome. The GOAT, guys, incredible. Definitely watch this interview if you haven't seen it yet. It's an hour and 15 minutes. There's so many things I took notes on that I didn't even include in this video. So definitely watch it. But hopefully you got some value out of me sharing my highlights. I know I did. It helps me really integrate those things. So thanks for giving me a reason to do that. And without further ado, thanks again for watching, and I will see you all in the next one. Take care.